Yes, we had a challenging year, but I would say thanks to our decentralized and very broad-based offering, we were able to overcome and turn these challenges into opportunities in all our markets. And that's ultimately then also giving us the base for the strong results of 2022.
In terms of the various segments that you operate in, it's very wide as we take a look at some of the industrial areas. What is holding up at this point, despite the issues around high interest rates, the repricing of credit markets, concerns around the economy, and of course supply chain? What's still proving resilient?
I mean, for us, it's the infrastructure market, which in mature markets needs overhaul, expansion, and renovation. That's a very strong segment for us, especially in the mature markets. But also then you can say infrastructure in emerging markets, high in demand. It's needed to build the infrastructure for future growth. So I would say infrastructure is very resilient in multiple ways for us.
Thomas, if the audience is not aware, just to fill in some of the blanks here, basically it's a whole range of fastening product that is related to the construction industry, whether it's in concretes or glazing or elsewhere. And I'm very familiar with them as an active DIYer. I think I've used some of your products myself. My question would be, in a world where we think that the domestic housing markets in a lot of Western economies are going to be impacted by higher interest rates, do you see any hit at all from slowing housing construction programs in the Western world?
Glad to hear that you are preferring quality products, and that's for us a rather minor segment. Housing, or let's say the residential market, is a huge market globally speaking. It's much larger than, for instance, infrastructure, but it is not our core area where we are active. And we see that there are tremendous waves going up and down, and currently rather on the low side from China over to Europe, as well as in the US, of course, driven by interest rates and all other concerns, let's say, of consumers investing. But it's for us a rather minor market. We are more in the, as I mentioned, in the infrastructure, commercial, also governmental, hospital, educational, building, industrial. That's where our quality products are, let's say, most successful.
I don't know a constructor or a builder who hasn't moaned about input cost inflation, and you're in that interesting position in the chemical space where you see it coming in, but you also have an opportunity to pass much of it on. How would you describe the story of inflation for Sika? Have you managed largely to push through those costs and add a bit on top?
Of course, we will, as our customers, very much impacted by the inflationary cost. The raw material increased tremendously over the past 18 months, and we had to transfer this over, but we could not, let's say, maintain our material margin. So we are at the below 50% material margin. So we also take our share, but we offset to the bottom line by our own initiatives on efficiency, cost management, so that at the end we still can deliver outstanding bottom line results as well.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.